Nice. All major indices are hitting an all-time high this week besides small caps.
Doesn't this worry you? I mean, should we take profit because the market looks like it's going to top soon?
Oh, thanks. That's exactly why I'm still sitting in my position because you think the market is going to go down.
Hmm, I sense a bit of sarcasm in you. But anyway, Coinbase DPO on Wednesday and is ranked as the seventh biggest new US listing of all time.
Yep, insane valuation for a cryptocurrency exchange platform. And why did I say that? We will discuss more later in our video.
Also, it seems like we are putting the 1400 stimulus checks in good use. The retail sales exploded in March and boomed 9.8% higher.
Well, I sent my 1400 straight into Kathy Wood's wallet, and she's not doing so well with it lately.
Last but not least, we will talk about popular requests from last week, Plug, and why the stock has fallen nearly 60% from its high.
And don't forget to give us a like and make sure you stay till the end for our top picks of the week.
So besides the retail sales boost, we also saw a big GDP growth from China in Q1.
So that tells us the Chinese companies are doing very well. Those, of course, includes common names like Baba, JD, and Baidu.
Don't forget how this number could benefit the American companies as well. Private consumption is a major part of the GDP, and as the consumption power of the Chinese increased, more revenue goes to Apple, Tesla, and Starbucks, etc.
Looks like the two biggest economies are reporting nice recovery data. So let's keep that in mind as we look forward to Q2's economic results.
Speaking of the economy, let's review this week's market and look ahead into next week.
Another week, another new high. What else is new?
The S&P closed the week at 4,185, and the first support is around 4,140. The daily chart is signaling overbought condition and diversion is forming.
Oh no, overbought and divergence? Two of the seven deadly sins. Anyway, Nasdaq also closed at 14,041. First support level is around 13,880. The market breadth is quite bad this week. You might notice why some of your positions are in deep red and market closed green almost every day in the past 2 weeks.
We are seeing some unusual bear volume. Maybe this explains why the market is behaving this way. It's not wise to short the bull trend, but definitely should consider some hedging position when the market is behaving like this.
Small cap is lagging behind, but this is definitely where all the money will pour into when the S&P and Nasdaq retrace.
Does that mean I should sit tight with my small cap position now?
You could, but keep watching and let's find out more. On Wednesday, the first crypto broker went public.
Definitely the hottest topic of the week. Coinbase has the highest initial valuation before going public since Facebook.
Absolutely. Our friends on the street are predicting 100K to 300K target for Bitcoin.
So naturally, being the largest crypto broker in the US, all the investors are excited about this DPO.
Yup, look at Tesla on Tuesday. Pulled up 8%, most likely because investors are bullish on Tesla for owning 1.5 billion worth of Bitcoin.
That explains Coinbase opened at 381, which is 52% higher than Nasdaq pre-IPO valuation for the company.
And it almost hit 430 within 30 minutes, an insane 72% movement which valued at about 112 billion. But unfortunately, it did not chill around 420 and closed at 328.
So if you chased in the morning at any point and didn't sell within 30 minutes, congrats, you are trapped.
Check out the bearish end of the valuation for Coinbase, which is around 165 to $240. And even Nasdaq's suggested price of 250 is already on the higher end of that range.
Which means if you chase at open around 381, you are already assuming a lot of risk, especially when the Coinbase is a DPO, direct public offering.
Which means early investors or shareholders before trading open can sell shares right at open without waiting for a lockup period.
Yep, a direct listing basically means that if the price is way out of the reasonable valuation, it will be under a lot of selling pressure. If I'm an early investor or an employee and I see 420 share price on the opening day, I'm paper handing all my holdings.
I would too. Not saying other people would do the same, but it's definitely a logical thing to do.
Not to mention, Coinbase gave 100 shares to each of its 1,700 employees right before the direct listing. If you liquidate all that right at market open, that is $38,000. Many of us have to work a whole year for that kind of dough.
Wow. Why didn't we apply for jobs at Coinbase before this? Life would have been so much easier. But anyway, you're basically catching the falling knives from the employees selling these shares.
Exactly. Even if there are institutions that want to pull the stock, they would think twice about loading up these shares because they might be catching a hard falling knife that could keep falling.
Yup, and institutions, as we all know, don't do losing deals. If they lose, they halt the trading.
So if I really want to own Coinbase, what would be a good entry to start?
I think 280 would be a good spot to open a small position. Definitely not anywhere above 300.
Yeah, since Bitcoin has a lot of hype lately, once the Bitcoin hype cools down a bit, Coinbase stock price to 150 to 200 are totally possible.
I agree. Since it's not the only crypto broker out there, there are more and more with a lot less fees and commission.
Yep, there are brokers like PayPal, Square, Robinhood, and Binance.
Oh, I see. So even if it's the first crypto broker going public, it is still facing immense competition already from the big companies.
Absolutely. With that being said, there are still institutions that believe Coinbase has room to go up.
According to Lisa Ellis, Coinbase is the leading tech infrastructure provider for the crypto ecosystem.
She's bullish because she thinks crypto is a disruptive instrument. And as the only public crypto broker, Coinbase is a must have for investors who are bullish in the crypto area. She calculated her price target by using Coinbase revenue expectation with forward PE of 20 to get $600. What do you think about that?
I think 600 is just a tad optimistic. I think she probably did not take the cyclical characteristic of cryptos into consideration. If Bitcoin corrects later this year or in 2022, it will sharply reduces the trading volume of the cryptos. Her calculation is based on the Bitcoin boom in the past few months. If Bitcoin starts to drop later this year, then it would be hard for Coinbase to maintain the high growth rate of this quarter.
Let's look at someone who is bearish on Coinbase. According to New Construct CEO David Trainer, Coinbase valuation is about 19 billion, which is about 85 to $90.
Wow, that's basically the polar opposite of what Lisa Ellis is saying. But if Bitcoin can go to 300K, like Kathy said, then Coinbase could really go to 600. Is the bearish case of $90 possible?
Since we are currently in QE, the $90 bearish target is not looking likely in the short term. The thing that will trigger the big drop of Coinbase, in my opinion, will be new cryptocurrency regulation.
In the short term, if we expect the hype to continue, we don't think the room to go up is really big, probably around 15 to 20%. Because, like we mentioned, Coin is a DPO, and original shareholders can sell right away and not wait for the lockup period.
Fuel cell maker Plug Power's stock price has fallen to a new low in 2021 and closed the week around $27.
Yeah, it has fallen nearly 65% from its high price of more than 75 this year.
As we are in a pivotal time for renewable and clean energy, Plug Power plays an important role and has drawn a lot of attention from investors for what the company holds in the future.
But the stock price movement lately is quite disappointing.
The company is working aggressively to grow its revenue and has recently entered into several key partnerships that should help it achieve this goal.
They entered into partnership with Europe automaker group Renault to make commercial vehicles and previously announced a deal with South Korea's SK Group to establish a huge fuel cell and electrolyzer production facility in South Korea.
Also, they recently announced its plans to build a green hydrogen production facility in New York with a production capacity of 45 metric tons per day.
A lot of positive news, but the stock is down so much, and they received a compliance warning from NASDAQ due to the delay in releasing its annual report.
Yes, so Plug received a warning for not yet filing the annual Form 10-K with the SEC. And it has 60 days or until May 17 to file before an additional action are taken by the NASDAQ. If the company is unable to submit before May 17, then you will submit a plan to regain compliances before the date. If NASDAQ approves the plan, then they will have until September 13 to file the report.
Do you think they're hiding something? Maybe some bad number they are not yet ready to make public?
I doubt their accounting department went out to the party the night before and forgot to file the report. According to class action lawsuit, sounds like they lost the right to use some of their assets, and those assets are more likely directly impacting revenue generation. Otherwise, they wouldn't miss the deadline to try to fix it.
That could get ugly. If they don't have a mitigation plan to go with the disclosure in the annual report, or maybe they have to pay a big fee to recover the assets. Also, Plug's stock price went up as much as 2,500% since the beginning of last year. They definitely don't want to look bad and lose the hype.
Even after 20 years in operation, Plug Power continue to incur losses, but they are doing a lot better growing their revenue.
That is actually one of my biggest concerns. Even after 20 years, they haven't figured out a way to become profitable. Amazon figured out a way after 14 years. Well, obviously, Amazon has a very different business model.
Let's take a step back. Plug primarily provides hydrogen fuel cell systems that use hydrogen to produce electricity. However, as much as 95% of the hydrogen produced in the US is derived from natural gas at the moment. They aim to produce 50% of the hydrogen it used from renewable source, which is known as green hydrogen by 2024. Meanwhile, Plug will struggle to keep their losses down as their revenue grows.
All right, I can understand that. So, as investors, we should be expecting some technical breakthrough within the next 2 to 3 years. And once the company figures out a way to produce green hydrogen efficiently, they'll be able to lock up more customers and hopefully generate positive operating income, right?
Let's hope Plug can come through with some good explanation for the delayed submission in their annual report. After all, they are still a major renewable energy player in the market.
Speaking of which, check out our picks for next week.
My first pick of the week is one of this week's IPO, TSP. Too simple. This company develops self-driving trucking vehicles to make long-haul transporting safer as well as more cost and fuel efficient, while tackling the massive truck driver shortage in America. This company IPO opens at $32, and I personally think is a great price point.
And for my first stock is not really a pick. A lot of my friends have been asking us about Palantir. So I want to use this opportunity to talk about the current status. For Palantir, since it went up so much since IPO, there are a lot of people trapped from the current price to $30. Anywhere within this range assumes a lot of selling pressure. You never know when investors will sell or cut their losses between here and $30. It could be 10 cents going up, a dollar, $2 before the stock takes another plunge.
OPEN, Open Door Technologies, is trading at around $18. Definitely a great price point to consider if you are confident that online real estate will take over traditional processing in the near future. Zillow is at 134.
Hey, I'm with you on the online real estate. So RKT is my next one. I will look to get some RKT below 20. It's been sideways for a while now, and the consensus expectation is low for the revenue and EPS given the recent boom in real estate. I think the surprise factor can be high for Q1 earning, which is around mid-May.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.